Hey there, Kirsty and Steve here, and welcome back to Financial Freedom for Gen X, where we are all about sharing our journey to financial freedom and getting out the rat race.
Today we're tackling a big topic that's been making some headlines, the potential for an upcoming financial depression. We will break down what a depression is, how it differs from a recession, and what it could mean for us here in Australia, with some facts and figures to really ground this discussion.
Right. So let's start with the basics. We have all heard of the Great Depression, which began in 1929 with the Black Tuesday US stock market crash and lasted through most of the 1930s. During that time, global GDP fell by about 15%, and in Australia, unemployment shot up to nearly 32% by 1932. A financial depression is essentially a prolonged and severe recession with significant declines in economic activity, widespread unemployment, and financial instability.
To put it into perspective, a recession is defined as 2 consecutive quarters of negative GDP growth. Australia narrowly avoided a technical recession during the COVID-19 pandemic, thanks to quick government intervention and stimulus measures, which has left the country in quite a bit of debt. But a depression is much worse. We're talking about years of economic contraction, not just months.
So, why are we even talking about a potential depression now? Well, there are several warning signs. Globally, inflation has risen rapidly. In Australia, it peaked at 7.8% in December 2022, the highest in over 3 decades. Central banks, including the RBA, which is the Reserve Bank of Australia, have been hiking interest rates up to combat this, but that brings its own risks.
Exactly, Steve. Higher interest rates make borrowing much more expensive, which can slow down economic growth. This is already affecting the housing market. As of the mid-2023, Sydney's house prices had dropped by about 8% from their peak in 2022. If rates continue to rise, we could see further declines, which would impact homeowners and investors alike.
Another concern is Australia's close economic ties to China. China is Australia's leading trading partner, accounting in almost 29% of our exports. But China's economy has also been slowing down, with growth rates falling from over 6% in the mid-2010s to just 3% in 2022. If this trend continues, it could severely impact sectors like mining and agriculture, which are heavily reliant on Chinese demand.
And let's not forget about unemployment. During the Great Depression, as mentioned earlier, Australia's unemployment rate soared to nearly 32%. While that level of joblessness seems unlikely today, even a modest increase in the unemployment rate can have serious consequences. As of July 2023, our unemployment rate was sitting at around about 3.5%, and it's now currently sitting at 4.1%. If a depression hits, we could see that climb dramatically.
So, what would a depression look like for the average Aussie? For one, we'd likely see a significant increase in bankruptcies. During the COVID-19 pandemic, the number of businesses entering administration rose by about 30% in 2020. In a depression, that number could be significantly higher, especially in sectors like retail and hospitality, which are highly sensitive to consumer spending. ASIC's annual insolvency data as of the 25th of July 2024 shows more than 11,000 companies have entered external administration.
And speaking of consumer spending, it tends to plummet during a depression. In the Great Depression, consumer spending in the US fell by 18% from 1929 to 1933. If we saw a similar decline here, it would put immense pressure on businesses, leading to more closures and more job losses.
So let's talk numbers. During the Great Depression, Australia's GDP contracted by around 10% between 1929 and 1931. In a modern context, a similar contraction would wipe out over $200 billion from our economy. That's a staggering figure that would affect everyone, from the top end of town to the everyday Australian.
And then there's the impact on the share market. During the global financial crisis, or the GFC, in 2008, the ASX 200, Australia's benchmark stock index, lost over 50% of its value in just 18 months. If a depression were to hit, we would see similar, if not worse, declines. For those of us with superannuation tied up in the market, where that could mean significant losses.
So, what can we do to prepare? As we've always said, having an emergency fund is crucial. During the GFC, it took the ASX 200 over 5 years to fully recover. Having a financial cushion can help you weather those tough times without having to dip into your investments where they are at their lowest.
And it's also important to review your investment strategy. Diversification is key. In the past, we've seen that certain assets like gold and silver tend to perform well during economic downturns. You might want to consider adding some defensive assets to your portfolio to hedge against potential losses.
Another practical step is to reduce any high interest debt you might have. During the Great Depression, deflation, a decrease in general price level of goods and services, actually made debt more burdensome. Paying off the debts now can free up cash flow later, which is crucial in tough times.
And don't forget about keeping your skills sharp. If unemployment rises, being adaptable and having in-demand skills can make a huge difference. During the GFC, many people had to pivot careers or take on new roles to stay employed. It's worth considering how you could do the same if necessary.
So, there you have it. A detailed look at what an upcoming depression could mean for Australia, with some facts and figures to help put it in context. It's a tough topic, but understanding the risks and preparing for them is the best way to protect yourself and your family. Thanks for watching, everyone. If you found this video helpful and informative, please like, subscribe, and hit the notification bell for new content.
And drop us a comment below if you have any questions or tips on handling a depression. Stay informed, stay prepared, and take care. And remember, life is always good because we have red wine and Tim Tams. Cheers.
Cheers.